The US dollar has been a key leading indicator for trade war sentiment, and it's almost as if the US dollar is saying that it thinks trade headlines have lost their credibility. Okay, briefly moving over to Bitcoin, and I'm on the weekly time frame here. We're going to cover this much more in the TA section, so I'm not going to spend as much time with it here. But you can see that we have a strong base forming with these 3 green weeks. We need to watch the close on Sunday to make sure this closes green, but it's seeming very likely. We are back in the middle of this former trading range, so we have broken cleanly into that, which is a fantastic sign. Now, this big candle does worry me a little bit because sometimes when extreme moves come, that can lead to some chop, as we saw here on the downside. So I would anticipate a bit of a pullback before we continue on up. That would also help us to form market structure. If things go up too fast in a straight line, it means they're going to come back down to earth rather quickly. But if we can form a base and bounce away, that gives us more historical volume and trading ranges to build support underneath. There is so much more to say on this chart, but we're going to get into it at the end of the video, so just hold tight. Moving over to Solana on the daily, I will just make this full screen. And here we have our key $150 resistance zone right here. We have gotten on top of that, and right now we are testing that for support. I wouldn't hate it if we broke below this and then retested support before having a genuine breakout to the upside. If you recall from last week, we had this very clean inverse head and shoulders right here, and that has a price target of $180. So we're still targeting that in the near term to the upside. It is notable that today on Friday, Solana was showing relative weakness compared to Bitcoin and the broader market when it had been showing strength all the days prior. So maybe that's just a sign of a bit of exhaustion right now, and we either need to consolidate or we need to have a little pullback before we can attack the upside again. That 180 level is really the next one to watch overhead. So that $180 is really our next major resistance zone overhead, followed by the 195 mark, which is the 50% level from the all-time high to the bottom of this drop. Beyond that, the psychological $200 to $210 range will provide a lot of historical resistance. But once we break above any of that, then I would anticipate a bit smoother sailing to the upside.